Welcome back to another episode of the Cap Table Pre-IPO podcast. My name is Aaron Ross. I'm joined by Aaron Dillon, Managing Director of AG Dillon & Co. And Aaron, I have a few stories that I want to talk to you about today. Huge
All
week
right.
in AI infrastructure. All right, the startup Etched got a lot of attention. They're an NVIDIA competitor. They hit a $5 billion valuation. And right now we're seeing it in the public and the private market. Everyone's just like, how far can the AI chip market actually go? Especially with it
Right.
being like specifically based around inference right now. Valor
Yeah.
Atomics. I love this company. This is Palmer Luckey and Sham Sundar from Palantir. This is like defense tech's play into nuclear energy right now, and I want to talk to you about that. And Together AI. People are thinking that neoclouds are gonna slow down sometime soon. You've been telling me no, that's not happening, but they just raised $800 million, leaping to an $8.3 billion valuation. So I'll start with this, Aaron. All right, these guys, these Harvard dropouts, okay, they drop out of Harvard to create their
Etched.
own
Yeah.
chip, Etched,
Right.
and they're looking to be an NVIDIA competitor. They raised a bunch of money right now. And I think what we're seeing in the public markets now, and you're seeing it with these memory stocks also, it's like people are wondering how far is the chip market going to go? And you and I talk about inference all the time. And I know that
Right.
it's based off of these chips, but like, I don't know, Aaron, are we getting to a point where supply is starting to cross over that border for demand?
Okay. So I'm starting to talk with investors like this about AI because I think everyone's asking this question, right? But let me ask you this: how far along in the AI cycle do you think we are? Just kind of like I'll call it more broadly speaking, both for consumers and for probably maybe more importantly for businesses. Like, is it early innings? Is it late innings? Like, what do you think?
I would say it's extremely early, but with that, I would also say it's so early that we don't know what's really going to work yet. Like, I wouldn't be
Yeah.
surprised if in a couple years everyone's like, GPU, NVIDIA's GPU, that thing is cute, like, but we're not really using that anymore. Like, I don't know what the technology is going to look like. I don't know if investing in this type of hardware is correct right now. That's where my concern is more than like, I know that we're early, Aaron. I know that we're early, but
Yeah.
is this
Yeah.
the right thing to be focusing on right now for the future?
Yeah. Well, I mean, I think so. So this is what like is amazing and makes a market, right? Because I think there's a lot of people out there who are like, we're in late stage AI, or this is kind of like been played out or fully realized in stock prices or whatever, right? I I'm with you. I think this is just getting started. Like, and to your point around how you're not really quite sure how things play out, to me that tells me it's further support for why we're just getting started. It's like everyone sees this thing, sees that it's valuable and interesting. No one really quite knows where it's going to play out, or there's not like kind of coalition around a path forward. So yeah, man, I think companies like Etch, there's a whole bunch of semiconductor companies that are starting, kind of coming up and starting to bring product to market like Etched that I think are super compelling, right? So I'm a big believer in what this is AI infrastructure to me, right? Semiconductors, energy, data centers, and then even like the meta layers on top that help people route, to different data center providers or different model providers. Like all of those things I think are infrastructure. And since we're in early innings, we need a lot more infrastructure, right? So I don't think NVIDIA is going to be able to make enough chips to push this through all the way. I think these inference chips are easier to put together. They're less expensive, so I think there's going to be a huge market in inference. And even Jensen Huang has said too, like, 80-90% of the semiconductor market is going to be inference chips, inference, not training and model training. I think you're seeing it with the way models are coming together. You're seeing with how agents are being used. Like it's inference. That's the big opportunity, right? And even some of the recursive self-learning stuff that the model, like the frontier models are doing, that's even inference. So you train the model and the model runs and kind of trains itself. That's inference compute, right? It's really really quite compelling, kind of that post-training. So yeah, I think what these guys are doing at Etch is great. I don't have them under research coverage. But man, I think it's a super interesting company, right? And I certainly wish them the best, right? That they get out there and kill it with product in the market.
Yeah. Yeah. I mean, like when you're dropping out of Harvard to start a chip company, it's like, I mean, dropping out of Harvard is like, everyone loves to hear that, dropping out of Harvard to start this company. But like the chip market is just like, it's just moving so fast. I don't know what's going on in the public markets right now, Aaron. Like, I know that we talk about the private market a lot, but I mean, you're a financial expert, 25 years on Wall Street. Like, do you think that there's any real signal right now in the public markets, or do you think that this is just
Yeah.
noise and companies taking profit share? What's going on?
Mm. So I'm not like really quite convinced that. So first of all, I'm like a markets guy. So the market's always right. Full stop. Right. So, like I'm not one to come out and say like, oh, that thing's overpriced, that thing's underpriced. I mean, stocks get overpriced and underpriced, but I think in the long run, the market always gets it right. So, like, look, but I will say this, as I talk to market participants, I think there's very few people that fully understand like what's going on in the AI space, right? Like you got to get into like, an analyst that really kind of truly understands how AI works or has used it themselves. Better yet, they've coded something up or they're a heavy user of Claude Cowork or, OpenAI Codex or some other solution, like one of these coding tools, and they kind of like see the power of what's coming. That's when you start to talk to people and you can kind of, you're a user, you're kind of a power user, and then you just like intellectually kind of move down the supply chain or the food chain to, the infrastructure side, and you start to realize what's what and what the opportunities could be. So, and I just don't see that. I don't see that. Like I see a lot of stock analysts that are like kind of rooted in the past, right? They're like fundamentally rooted in the past. Like this is what it used to be. And now we're talking about this and this is crazy and how high this has gone and it's not sustainable, right? And it's not really like, I think looking at the fundamentals. So, that kind of reminds me, if maybe one good thing is like when the hyperscalers were spending all this capital a couple years ago, year and a half ago, probably everybody in the market was like, this is nuts. This is insane. How can we sustain all this stuff? Right. But you got to think about what you're saying. Like you're talking about like Google Cloud, you're talking about AWS. Like those people are very smart people, very smart. Okay. They're talking with their customers and their customers are telling them what they need and what their plans are. Their customers are very smart people, right? So they're like using AI in their applications, in their businesses. They're seeing the forecast and the adoption within their organizations. They're coming back to their service provider, the cloud, who are also very smart people saying, this is what we need from you. And then these guys are turning around saying, okay, I need to build this out. So I need the capital. I need the money. We got to put the spend in. And then they spend the money. Like, it's not like it's you and me, like sitting around in a conference room being like, hey buddy, what do you think? 40 billion next year? And you're like, sounds great, man. Let's go. That's not this. It's not like it's some like, speculative bet. It's like a well-informed, educated decision. I mean, maybe if you're hearing everything from your customers and you're like, you know what, I actually think like real world supply, like demand is going to outpace what they're telling me. So like, let's build more or let's build out ahead of that because we want to take market share. Like that's a strategic decision. But I don't think you're going to get companies that are going to like go way over their skis, 2x, 3x. So yeah, man, I just think that a lot of public market participants don't really fully understand the scope of what AI and the value that it can add. So they just see these projections and kind of the capital going towards it and they just balk. It doesn't make sense, right? But I'm for what it's worth, I'm a big believer of all this stuff. I think a lot of this stuff is going to come to fruition, right? To your point, there's a Monte Carlo simulation there, right? But it's going to be up and to the right. It's just
Yeah.
how far up and to the right it's going to be, I think is the question.
Yeah, yeah, I think that a lot of people would agree with you and be like, okay, maybe there'll be some point where like we get a big scare and the market dips a little bit, but like 5 years from now, we're going to be in a much more green place than we are today. And I would agree with that like across the board. When we're talking about like AI infrastructure and the layers of investing, I always think about Jensen Huang calls it the five-layer cake. All right. And at the
Yeah.
bottom of it is energy. And we talk about inference all the time, and it's super important and it probably will be like the biggest market in the world soon. But it's nothing without the layer under it that powers it. And I don't know about you, Aaron, but there haven't been so many names within like the energy space that I feel like have really stood out, have had their Micron moment or their Grok moment or their Cerebrus
Right.
moment. Are there
Yeah.
any companies within the energy space that you're looking at right now and you're saying they're doing something extremely interesting? I think the timeline actually looks shorter. I think that like,
Yeah.
this is coming up next. What are you seeing in the energy space right now?
Yeah, I mean, I totally agree with you that energy is like firmly implanted in the AI infrastructure space. In fact, I think most market, kind of most experts in this area would say that energy will be the ultimate bottleneck, right, in the long run. Like how fast we can create energy. I mean, Musk wants to put data centers in space so that he can have an endless amount of energy, right? 24/7, 365. So, I think there's certainly something to that. Back here on Earth, it's probably nuclear, I think is the way to go. I mean, you mentioned Valor earlier, right? I mean, I think it's still early for me. I don't know. How do you is this too early for you? To me, it's too early, right? For some of these companies. But what do you like? What are your thoughts on specifically maybe these like small nuclear reactor businesses? Those are the ones who I think will win, right? Is the small
Yeah.
nuclear reactor businesses. Like, is it too early for you? Do you think now's a good time to go? Like, timing's everything, I think, with this stuff.
Yeah, I think that a lot of people are waiting for a fission to come online and they're super excited about that. But with the technology that we already have, Aaron, it's like we have so much space. Nuclear is really safe. It's actually super environmentally friendly rather than like, these data centers like Crusoe pumping, natural gas, other toxins into the air. It's like you have to do what you need to do for this compute. I understand, but I think that nuclear is just going to like, it's an excellent solution. And I think with the demand that AI is creating right now, and especially with like the Trump administration being in office right now and just seeming to be like, go for it, we'll approve it. I think that nuclear is about to have its Hollywood moment. I really do, Aaron. And also like we're in this asset class of pre-IPO stocks. And one of the beautiful things about this asset class is that you're going to look at one of these companies and it's not like you're investing in like a seed round or a series A. You're investing in companies with Nvidia behind them. Coastal Ventures, like, Andreessen Horowitz, these big names behind these companies, it
Right.
lends a lot of credence to who they actually are. And one thing in particular that I love about Valor is that they fully have this new the defense primes around them right now. Like having Anduril, or excuse me, I shouldn't say Anduril, it's really Palmer Luckey and Sham Sundar. Those are just two huge names behind this project. And I love it that defense is like kind of giving them the push that they need. I actually think that, you said it before, if you have the guts to do it, if you have the guts to do it, then it might be the time to check out nuclear. But Aaron, I'm looking at Valor right now, and I just really like what I see. I like the names behind them. I like what they're doing. They just hit criticality last week, which was like a huge breakthrough for them. They're powering NVIDIA chips right now. It's like, it's
Yeah.
happening, Aaron. I don't know. I think
Yeah.
that the timeline, this could be like the opportunity to get in it. What do
Yeah.
you think?
So it's like a risk. So talking specifically about Valor, like where my brain goes is it's a risk adjusted return thing, right? So, if Valor becomes a major utility provider, electricity provider for like data centers and other use cases, I'm sure there'll be others, right? That's like super compelling, and that will be a massive return if you took a position right now. Like I'm sure that's going to be a multi-$100 billion business, right? To me, okay, let me maybe see it differently. This is how my investor hat works, right? You believe that this thing's going to be a multi-$100 billion business. Let's say it's going to be, $100 billion, $200 billion business. Okay. You believe that. So then it's like, when do I get in? Okay. Because you could be wrong. And if you're wrong and you get in now, so like your potential for being wrong gets smaller and smaller the closer that you get to the 100, 200 billion, right? Like when you're 190 billion and you think it's going to go to 200, like what are the odds it's going to go to zero? Small,
Yeah.
maybe very small, not even existent, right? If you're a $5 billion company and you think it's going to get to 200, what are your odds that it's going to go to zero? Could be very high, right? So like they have no final product, they have no mass production of that product, and they haven't generated any meaningful revenue, right? So like those are the three things for me that I like look for. And then once I see those, so anything before that is like crazy speculative. Not that it's bad investment. It's just very speculative, right? So you're going for the Grand Slam and the bottom of the ninth in the World Series. That's how I look at that, right? Where, they have a final product. They're producing that product at scale, and then they're able to, generate revenue from it. Like to me, that's when things can get super, super interesting. And, you have a much less of a downside risk and you have a much better, upside risk, upside return potential. So that's what I'm like waiting for in this kind of, I like fission. Okay. I like nuclear. I like fission. I like the small nuclear reactor. I'm waiting for these guys to get a product that's like live out in the marketplace. Right. That's what I'm
Yeah.
waiting for. So, yeah.
Yeah, I think that's the intelligent investor approach. I think there are some people out there who would just be like, I have such high conviction. I'm swinging the bat. I'm swinging the bat, but if it's a swing and a miss, it's like you're out. You're out of the playoffs. It's
Yeah.
like it's over.
Okay.
So,
But listen, that makes a good point though. But like, let me ask you this question then. I mean, if you really like this space, you could do like, if you had your pre-IPO stock portfolio, you could do like a less than 5% position here, going in eyes wide open, then it could potentially be at zero. What's wrong with that? It's just got to be right
yeah,
sized.
yeah, I guess so. It's like it's also about the timing right now too. It's like I almost feel like the markets, it's like a self-fulfilling prophecy. Whatever is out there in the news, all this noise online, it just really interferes with like, okay, can we look at this objectively right now? But the truth is, Aaron, when I just try to look at it, put my investor hat on, yes, they're early stage. Yes, they haven't deployed anything, and it probably wouldn't be the smartest move for everyone to get in right now while they haven't actually started deploying things at scale, deploying their product. But I think that energy is still young right now. And
Right.
of course, like there's so many great names in the inference space, like Together AI is incredible. All the neo clouds seem to just be killing it.
Together AI.
Yeah, like I think the neo clouds, it's all incredible, but it's like we're always trying to time the market here, Aaron. Like the moment for robotics. You say it like, no, like it's gonna happen, but let's catch it on its way up. The moment for nuclear, let's catch it on its way up.
Right.
I like that way of thinking right now. It just feels like everything's moving so fast, Aaron. I do want to diversify my portfolio. And especially, maybe I'll ask you this, Aaron. Like, it's someone
Yeah.
who's trying to create a bespoke pre-IPO portfolio right now. What do you think they need to break that down into right now? Like, if you had to say, like, okay, I want you to be this heavy in inference. I want you to, have this much allocated to energy.
Yeah.
Just off the top of your
Okay.
head, I don't know. What are you thinking?
Yeah. So it's all AI right now, right? So AI inference, AI application companies. Like there's a lot of interesting things happening in space, but to me that feels too early. Okay. The model platform layer, I'll call it the platform layer, right? Where the large language models are, I think those are fully valued. Maybe there's some stuff in the world model space that we've talked about, right? I think that's kind of interesting. But yeah, AI infrastructure, AI application companies, those are the two things, right? And for AI application companies, I would only focus on those that are enterprise. They should have forward deployed engineers. They should have open architecture on the model front. And if you can get outcome-based pricing, that's the trifecta. So any companies that have that type of, call it meet those criteria, I think that's a win on the AI application front. And there's going to be a lot of AI application companies coming. That's
Yeah.
my prediction. So ample opportunity to invest and diversify there. And then in the AI infrastructure space, I think it's, data centers, it's the model routers like Factory AI, it's the base 10s of the world, right? Routing to different data centers and GPUs and inference chips that aren't being utilized fully. I think open source is interesting. You could probably put that in the platform space, but to me, the open source models are kind of more in that infrastructure layer. Like, Together AI, they have like the open source models already on the platform. You can just API in and start using them, right? Like
Yeah.
that's interesting too. So I think all of that is super compelling. Semiconductor chips I think is compelling, but again, the energy we just talked about, like to me it's still a little early on the energy, right? But when it does
Yeah.
happen, nuclear, small modular reactors, nuclear, fission, not fusion, fission would be the space for me. And like, look, how do you allocate across that? To me, the infrastructure is less risky, so better, I'll call it less investment risk versus the AI application companies right now. So AI applications, the companies I think are still a little bit more speculative, but so maybe you're looking at, depending on your risk profile, you kind of probably weight those a little bit differently, right? If somebody was
Yeah.
very, very aggressive, I would have them go into robotics, humanoid robotics, right? I'd have them have allocations there. And, so if it's a very, very wealthy person and I would probably have some, even in a kind of a base risk model, I'd have some exposure to humanoid robotics. Like I like Figure AI, I like 1X, I like Apptronic in the private space, right? Tesla obviously has some Optimus robots. They're interesting too. But like that's interesting. If it's kind of a, I'll call it a higher net worth person, moderate risk, I wouldn't have robotics in there, right?
Yeah.
Not quite yet, unless they're very, again, if that's a moderate risk. If they're very speculative, then I think it's okay to have an allocation to AI or to humanoid robots. But yeah, so for most investors, it's AI infrastructure, semiconductors, data centers, I'll call it meta layer on top of data centers, and then AI infrastructure or model routers too, kind of those four buckets. And then AI application companies, on the AI side. And then you're just balancing those based on risk profile. More risk, more AI application, less risk, more infrastructure. That's how I would be building portfolios right now. Right. But
Yeah. Yeah.
yeah.
I appreciate how we break that down, especially like, diversifying the risk and like trying to hedge it out with something like AI infrastructure that's a little bit more stable. But I want to talk to you about open source models and open source architecture because I think this is like where people kind of start like they're like, I'm checked out. Like
Yeah.
like what's open
Yeah.
source, what's closed. And I think a lot of people are seeing like, what's happening in China right now and with companies starting to pivot to using cheaper models. Do you think that an open source model has the potential to be like the next trillion-dollar company? What sort of growth do you think that we could see coming from the open architecture, open source model space? And can it be comparable to something closed source?
Okay. So I think that, like, I'll call it 80% of market share will be in open source models in the long run. Okay. So I definitely think there will always be a place for frontier models. I don't think that that's going to be a majority of the market share, right?
Wow.
But then
That's a
on
big
top of that,
statement. That's a big statement. Claude and
yeah,
Gemini, ChatGPT, they're not
I
going to be
think
on
it's
top.
intuitive. But I think it's intuitive too, because like the big buzz that everyone's talking about right now is it's like, okay, I have proprietary data. Okay, I have proprietary workflows and operational systems that I use. If I give that to the frontier models, the OpenAIs, Anthropics, then it's kind of like theirs. This is kind of like when you had an app on the App Store, and then Google would come in and like build your app and just kill your business,
Yeah.
right? And they could do it
Yeah.
because they were bigger, stronger, and then they were like hosting your app on the Google Play App Store, so they could like literally see the code. They could like see what was going on and how many people were using it and what they were doing with it, and they would just make their own and then kill you, right? So like there's some of that same logic, right, with the frontier AI labs. And so I think, some of this stuff will, I think, get pulled in house. So when I talk about open source, I'm not talking about like it's Kimi K2.5 copied it together, AI, and everyone's just using that like kind of general Kimi K2.5 model. No. I'm talking like you and I have a business. We have proprietary data. We have proprietary workflows. We take Kimi K2.5 and we kind of like build our own model based off of our own data, right? And then we're using that model to service our internal customers, employees, and our external customers, right? Like that's where I see the world going. I think we're going to have these open source models, right? Will be the foundation for companies and other, groups of people to build, or even AI application companies, right? To build their own proprietary models.
Yeah. I mean, it
And
seems like
that's
AI
and that's going
application
to be
companies. Yeah. Yeah.
that's going to be
Yeah. I
it.
mean, I was going to say that like it seems like any AI application company that's like, workload heavy into, let's say, one of the closed, Claude, Gemini, ChatGPT is really like putting up their data on the line right there and just basically I just read this article about Figma. All right, Figma
Yeah,
integrated with Claude.
yeah.
This was like a year ago. And now Claude like has Claude design. It's like they're smoking Figma right now. I think that Figma stock is down. I don't want to give a number. I'm not sure exactly what it is, but I know that it's down big on the year because like Anthropic was like, yeah, come like let us host your product. And then before they knew it, it was gone. Alex Karp, he was talking this week about how dissatisfied the U.S. has been going with these closed guys because they're like our data. It's this huge
Yeah.
risk. So
Well, enterprise clients too. He was mentioning in that interview, right? It wasn't just the
yeah,
government; it was the business customers too that they have. Yeah, you're right.
yeah. I'm wondering like it seems like we're still kind of waiting for the US like to open up their open source model that like really captures market share right now. Like I know
Yeah,
that like Meta
reflection
has
AI.
some, but
Yeah,
you think that it's
it's
going to
going
be
to be
Reflection
reflection.
AI? I was wondering if
Yeah,
it would be coming from the like a company that's already public like Nvidia who has the money to actually spend on opening up a model, But I don't know. Do you
Yeah.
think it's going to be coming from the private sector?
I no, I think Nvidia will the people will use theirs. I think Meta's models will get there eventually too. The and then look the frontier models they all have open source models too, right? So the models that are a little bit older, they end up, throwing those over the wall to the open source folks. So I mean, to me, like, it's interesting. I don't know if it much matters if it's these Chinese models or if it's a U.S. model. The frontier labs all gripe that the Chinese folks, their open source models are basically just like stealing IP from the closed source models and then using that, to build the open source. And that's why the open source, lags like very closely the closed models. But I mean, to me, Aaron, I honestly think like anybody who's going to be like any large corp company will have a proprietary model that the foundation of that proprietary model will be an open source model, and it will use their proprietary data and their proprietary workflow, and they'll have like these proprietary agents and that will execute work, and that'd be like substantially less expensive. There's even discussion too about having compute happen on a local level. So you get like those Mac Minis at everybody's desk, right? And you're not running it in the cloud, you're running it locally, and they're using the GPU or the AI chip inside the local computer to run the models, right? So, I think we'll probably, but look, these are all good things because this is capital markets at work. So everybody wants to use AI. Everybody realizes that they have a lot more places to use it. The cost is too high to just like go to Anthropic and do it. There are other issues to get the value without having to spend too much or lose value, IP value from your own company. So they're developing solutions to do that. So this is it. So like these things start to firm up, right? And mark my words too, like these big Fortune 500 companies, they start to get open source models with their own proprietary data and they start to develop competency around some of these things. They will sell those models to other people for sure. So,
I'm clipping
there's
that,
just
Aaron.
no way, dude, there's no way that you can have a company that's been operating in an industry for 100 years or 50 years or whatever it is, right? And you're very good at that, okay? That's too much data, too much industry know-how, too much specifics on how your customers work and how they want to engage with you, right? If you digitize that in AI, you will be able to outperform any frontier model. Full stop. There's just too much proprietary data that the frontier model would need to get, right? In order to train their model. Their model might be better, but if it doesn't have the data, the context, it won't be able to outperform. So like Chamath Palihapitiya just did something on that this past week with his new shop 8090, right? That just did the round and all that. He was coming out and be like, look, if you give something context, that even if it's a less intelligent model, it will deliver better results than a frontier model without that context. So it's like it's the combination of like access to compute, and the price that you pay to get that compute, the data that you have, and the model. All three of those things work together to deliver an outcome. And you don't have to have the best model to get the most expensive model to get the best outcome. That's whatever.
Yeah.
So that opens up so much opportunity, because there's three different levers to pull now, right? So it's just, as an investor, that's what I get so excited about, right? Because there's so much stuff, so much to analyze, so much to understand, so many pockets of opportunity, right? That will present themselves. It's just like amazing opportunity to make money, I think, right? So let's go.
I mean,
I'm pumped.
it's super exciting. And also like when you see like Chamath also starting to weigh in on this and the way that he explains it, like I listen to him talk about it on the All In podcast too, and you're just like, this seems to just be the big realization right now. And Aaron, it's like, it feels like every time I get off this podcast, like I go on Twitter like 2 days later, and you're just like, mark my words. And I see someone like some big name, Gavin Baker, Chamath, saying the exact thing that you said like just 2 days ago. So,
Well, I don't know
we're
about
clipping it
that's
up,
fine,
Aaron.
right? But yeah,
Yeah.
maybe one or two of those a year, right? Maybe.
I don't know, Aaron. I guess we'll have to see. I think you're onto something with the open source adoption that's like coming around the corner. Listen, it's super exciting.
Man, I'm here. So last point of this, like, I'm hearing a lot of people say, like a lot of company CEOs say that they're building their own models. So like you watch enough podcasts and you hear enough people like hit you in the head with like, oh yeah, we're building our own model. We're building our own model. We're building our own model. What are you basing on? Open source model. It's like everyone's doing this already, right? So they may not be like prime time, or they may not be using the proprietary model on like every single use case or task or workflow, but it's like trending that way, right? And then why would you
Yeah.
not do that? Like if you could deliver the same, so you're an AI application company, you have a customer. Okay, that customer wants a result. Okay, you're using Anthropic. You build your own model with the context. It's delivering equal results to Anthropic, but this one costs 10 times less. Your client has a contract with you. They're paying you for X amount per successful event, right? So now you switch from Anthropic to your own model. They cannot tell the difference, and you make 10 times more money all day long. So that's what's happening all over the place. So yeah, that's capitalism. So
Yeah.
it will that will happen and then all of a sudden everyone's like, wait, what are you doing? Oh, you're doing that? Should we be doing that? It's like, let's go. We're going to fire up our own model. I just think it's inevitable. Like it's going to catch on. And when things are financially motivated, economically motivated like that, they move fast, right? And this is already a fast moving space. So I would not be surprised to see this just like rip right through. And next thing you know, we got a lot of open source usage, right? But just to be clear though, I don't think that hurts OpenAI and Anthropic in the long run.
I think that's the real question that was going to be my follow-up question is like, how can it not be stealing significant market share away from the frontier models?
Well, look, I think what's going to happen, so it will steal market share, but the pie is growing, right? So now as you drive down all this cost everywhere, everyone's like, ooh, I had all these workflows that I wasn't going to automate because it was going to be too expensive. But now look, it's so cheap. I'm just going to automate everything, right? But then guess what happens? There's 5% of that workflow that's Anthropic, Fable 5. But that's like that little 5%. Now it's everywhere, right? So it's like a 10x increase of Fable 5, Anthropic usage across the entire market. So they will have less market share, but they're going to have healthy market share of a much bigger pie, much bigger market, right? So their revenue will go up and to the right. So everyone will win here. This is like the ocean is getting boiled, so everyone's going to win, and it's just a fun place to invest. I think it's a really fun place to invest. There's
It's
so
never
much
been more
opportunity.
fun. It's never been more exciting. And like, Aaron, listen, when you talk about this stuff, I just listen, and I guess only time will tell, but I think that we're onto something, Aaron. I think that like open source is really just gonna come around the
Yeah.
corner. It's gonna be all the rage in the world in just like 2 weeks from now. And I think that people are gonna look back at this podcast clip and be like, okay, fine, these guys are onto something.
Well,
So Aaron,
I hope you're right.
yeah,
I hope you're right. Thank you, man. I appreciate it.
yeah. Aaron, great speaking with you. I'll catch you next Tuesday. All the best.
All right, brother. Okay, man. I'll talk to you. Cheers.